All right, welcome back, everybody. So this is episode 2 of Future Proof. It's a part 2 of the first episode that I did, which was, can startups dictate the publicly traded markets, or can you anticipate that? And the answer was yes. Now in this episode, I'm actually going to go through a process of showing you, just giving you some little tidbits here about how is it that we can actually spot when a company has reached its peak, aka its prime, and ultimately these are the best years, to now being able to spot that the company is on its way out the door, heading into a decline. Not to say that they're going to go into the graveyard, but just more so in the sense that they're just going to fall out of favor. Well, I'm Mark Monroe, and this is Future Proof. Cue that intro. Prime. Though we're not talking about Amazon, though we can get into that a little bit. Prime, we're talking about when you reached your peak, when you start to notice that this person or this company has reached its golden age years, in which that you're probably going to see the best of their years that are ahead of them before essentially they start reaching that peak, and then essentially they're on the decline. Now, some folks, let's think about it. Let's look into sports. You know, we're always able to see when, say, for example, players, whether, through basketball, through football, through track and field, and many other sports, where you see that an athlete ultimately has reached their prime, which means that they're untouchable, they're at the apex level of competition, and honestly boosting ahead of their competitors. And literally where leader separates from follower. And then essentially we start to see that downcline after they go through their prime. Now that can be in many different phases for everybody or for companies. It always varies, so it's never really set in stone. But there are some things in which that we can draw in parallel to see exactly how is it that we can spot them, and to see that, oh man, we're starting to see some cracks in the armor. So let's take a look at it. And in this episode, I'm going to do a parallel universe between companies, and then also looking at it from an athletic standpoint. All right, so when we look at it, for all of you that know that my favorite player in sports, in all of sports, is Lebron James. Now, when we look at LeBron James's career, LeBron James has had probably one of the greatest careers, because he came into the league amazing. He's been amazing. And around the time that he was going to the NBA Finals for the Cleveland Cavs and then making the transition to Miami, a lot of folks would say that that's probably around the time that he stepped into his prime. And his prime has lasted for a very long time. But let's dissect that. Let's look at a company. How can we tell when a company has started their prime? So normally when you see companies that have started their prime, and if you went back to watch the other previous episode of Can Startups Dictate, you kind of understand the cycle of going through those funding rounds, from going from the private side where they're scratching and clawing, pretty much going through their high school and NCAA years before they got drafted. When you get drafted, that means that essentially you became a publicly traded company listed either on the NASDAQ, New York Stock Exchange, or wherever. So let's take a look at, I'm going to take Amazon, for example. Now, Amazon, we all know the story behind Amazon, right? For those of you that don't know, here's a quick little, refresher on Amazon. Amazon started way back, I think in 1995, as a company that ultimately sold books. Now, of course, when the dot-com bubble bust, they weren't one of the companies that ultimately fell apart. They actually kept going, and if anything, they started acquiring assets, and then pretty much went from just selling books to pretty much selling everything. And then from selling everything to literally building something called AWS Cloud Services and many other services that sit on top, including the Prime services that sits on top of their e-commerce business, along with entertainment and content now, as well as them moving into gaming. But notice how they started off with one specific thing, selling books. And then ultimately they became great at that. And then ultimately they started to challenge the status quo. And then from there, the world started to take notice. And then thus, they just kept building upon that momentum. Just like how startups do, just like how also athletes do. So then when it came time for draft day for Amazon, it was kind of like a no-brainer, except that the problem is that, again, they hadn't reached their prime yet. So they were a publicly traded company for like over a decade. And the company always had this thing where a lot of folks would say, well, Amazon's a great company, but when will they ever be profitable? Now, one of the things about Amazon, if you didn't know, is that Amazon was a company that believed in consistently reinvesting their dollars and their revenue back into the company. So pretty much it's like the equivalent of, why is this player not an NBA champion? Why was LeBron James not an NBA champion? But yet at the same token, LeBron James was consistently in the gym, investing into himself and also being more of a basketball savant and becoming even greater in the game. So again, his only knock was that he didn't have a championship. Amazon's knock was the fact that they were just not a profitable company. And yet they were publicly traded and their valuations, quote unquote, didn't make sense. But then there's this part where we reach this point in time where it's like a golden age period, just like in the startup world, where we say that startups reach a golden age period of time as well. In the publicly traded markets, companies reach that. Now that's the hope. Now the problem is that in some cases, you can also have a bust. Now a bust would be, for example, some folks would say that Uber would be considered a bust. Why is Uber considered a bust? Because of the fact that a lot of their glory heyday was done in the private markets. Now it doesn't mean that they can't come back and reinvent themselves, but the question is, will they ever step into their prime, given in the sense that their prime was probably in the private markets? And we see that a lot of folks thought the same thing of Amazon. Where was their prime years early in the days of like the early heydays? And then around 2013, 2014, things started to change. And then the company started to step into its prime. And when we mean by stepping into its prime, you started to see things, though that they still weren't profitable, but you started to see the progression. You started to see this rapid growth progression where things started to come a lot easier. Things started to become executed a lot easier. And then essentially you started to notice also their competitors that were in the space, or not even in the space, but the competitors outside of them also started to tremble, where they started to recognize that, you know, hey, the multi-billion-dollar elephant in the room is Amazon. How can Amazon be the multi-billion-dollar elephant in the room when essentially they're not profitable? And that is where the part where we say the boom period. Because the boom period is that now this company is now taking shape, form, and fashion. And we've seen it across many different other companies, right? Like, for example, look at when Tesla has now stepped into its prime. Now, we would say that, okay, hey, well, wait, Mark, how is it possible that Tesla is now in its prime when it's been doing all these things from early on? Well, the reason why is, look at the global expansion. Look at how fast they're able to move. Look at also in the sense of the market share that they're starting to take. Look at exactly the leadership and the lead that they're starting to build versus its other competitors. Look at the innovation that starts to come through. You know, Steve Jobs once said, innovation is what separates leader from follower. And that rings very true when we start to see companies step into their prime. So, for example, a lot of folks believe that companies like Apple, are no longer in their prime. And here's the argument behind that. The reason why people don't believe that Apple's in its prime anymore is because of the fact that Apple, for its very long period of time, was led by one of the greatest innovators of our time. If you think about like Apple, you can kind of put Google in that same kind of conversation where you had Larry Page and Sergey Brin and Eric Schmidt. You don't know who they were? Larry Page and Sergey Brin, they were the founders of Google. And then ultimately Eric Schmidt was probably one of the greatest CEOs that allowed to just be the CEO and ultimately let the other two founders just innovate. So you saw a lot of innovation that was coming forth. And then ultimately, again, they're no longer really there, and essentially the innovation is kind of like stifled. Now, of course, when you put other leadership in place, then ultimately you could probably hit that next leg, which gives you another vertical. But in this particular conversation, when we start to see that companies enter their prime, you start to see the market shifts. You start to see the ground shift underneath the feet of their competitors. And then you start to see exactly really, there's a change in leadership. There's a change in leadership, and then at the same token, you start to fill it with an investment. So when Amazon announced that they were profitable in 2014, 2015, then essentially the market had to take shape, form, and fashion and notice it. It's like, recognize me. We could put it in that same regard of the time when LeBron James won his first NBA title with Miami. You kind of start to see something here, right? You're starting to see something on the rise. And think about it, ever since then, Amazon never really let go. If anything, they just kept getting bigger and bigger and bigger and bigger. What happened with LeBron James? LeBron James has the longest streak when it comes to going to the NBA Finals. And so we start to see that essentially that you could recognize this is what it looks like to be in your prime. Now, what does it look like for companies that were in their prime and stepping out of their prime? Well, stepping out of your prime, you start to notice innovation starts to pull back. You start to see that more so, they start to focus more so towards shareholder value versus, say, for example, innovative value. You know, we've seen those companies before, right? The companies that care more so about the dividend, they care more about the dividend, or they care about more so about returning value to shareholders versus essentially putting the company in a completely different landscape that essentially will build even further market share and further market value versus essentially just giving small dividends to investors every now and then. Now, no knock towards companies that give dividends because essentially it's a great investment vehicle, it's a great write-off, and on top of that, it does wonders for the companies in which that, you know, literally would like to return value to shareholders. I mean, you're a shareholder, you're invested into a company, you want value, right? For example, why is it possible that, say, for example, people are willing to invest in an Amazon or in a Tesla, and we'll even keep Apple and Microsoft into this conversation. Why are they willing to invest in those companies versus, say, for example, you know, investing in companies like Boeing, investing in companies like GE, even investing in companies like, you know, Freeport-McMoRan, you know, Raytheon companies. All those companies it doesn't mean that they're bad companies, none whatsoever, but it just means that essentially it's also a sign of the time. When we think about the sign of the times, in the previous episode I said, think about like the time frame in which you saw the golden age of those startup companies, whether they were tech or not, and then you see that essentially that those companies ultimately that were on the rise and now they became leaders. Okay, now that we know that, now let's look at it in the publicly traded market side. And in the publicly traded market side, look at it based upon generation. Now, if we normally see that founders that normally lead, you know, specific startups to glory and greatness, they typically start within their early 20s and to their mid 30s. Then around the time that they become publicly traded, those same companies, which were pretty much influenced by a significant generation, they tend to carry on and follow. And then it makes sense, why is it that essentially that certain generations don't invest in other companies within the publicly traded space? It doesn't make them bad companies, it just means that essentially that, like for example, if you grew up on Scooby-Doo, and then essentially, you know, Caillou comes out, you're not gonna care about Caillou because of the fact that Scooby-Doo was ultimately your nostalgia. Or if you grew up on Lion King, but then say, for example, another movie like Raya came out, you know, these are not endorsements of these movies at all, but it just goes to show you that generations typically follow exactly like where they typically follow along on this process trajectory of what they were brought up on. So it makes sense, why is it that a Facebook has been able to carry so much investment? The reason why is because of the fact that look at the generations in which that has had an impact on. Now, when we think about it, how many Gen Zers know about the business model of a Boeing or a GE? How many, like, you probably may say that it's probably, you know, a baby boomer generation and Gen X or maybe millennial, but your Gen Z population probably doesn't know anything about GE. And the way that we know this is, remember that commercial, if you can look it up, there's probably a commercial in where they were trying to get people to recruit for GE, and they were showing this commercial by saying, well, what is this company GE? And it kind of failed, it didn't really land amongst the generation. And thus, hence the reason why the companies that land well are the companies that have social equity, social power. They influence the generation. So why is it that a company like Apple that was started, Apple and Microsoft, which were started in the 80s and like early 90s, where they really picked up, why is it that those companies are still relevant? Because they found ways to reinvent themselves that ultimately kept them relevant towards, say, for example, specific generations that allowed them to grow up. Those companies picked up on something. They learned something. Like when you think about why is it that Tesla is so widely talked about and why it's in its prime right now, is because look at the generation that it has an influence on. Now, of course, the company itself has to do its fair share of work. Social equity and power only gets you so far, but then the company itself has to execute. So, for example, though that Tesla came out and this was this revolutionary vehicle, if they couldn't produce, then essentially it's not going to go any further. And how do we know that? Look at a company like Uber. Uber has a huge influence as it pertains to the day-to-day activities of our generation and multiple generations because of the fact that it's really found a way to replace taxis and also do another way of which we get things to us, like from stores, restaurants, whatever you may have, and it allows other individuals to literally be the couriers, you know, for that last mile delivery or like within an hour. Those things are huge. But the problem is that the business model itself, the people are asking, well, what's the next generation? What's the next thing? And therein, that's the reason why we say that Uber step out of its prime. Now, can a company re-enter into its prime? Yes. That's the one part where companies differentiate from actual athletes. When LeBron James steps out of his prime, that's okay. He goes into a different cycle within his career, and it's still it could be another reinvention of his career, but yet at the same token, in that arena, Father Time is undefeated when it comes to sports. Father Time kind of slows down a little bit when it comes to companies because there's a differentiation. A company can be acquired. A company can also create another vertical, another business line that can also reinvigorate the business. LeBron James, his body will just get older. And that's really where the divided line really starts to differentiate and diverge from human prime and then ultimately decline versus company prime and decline and then reprime or reinvention and then ultimately possibly stepping into a new prime. The best example that I can give you that is look at Microsoft. Microsoft is a company that was in its prime. If you look at back in the day when Microsoft was literally the powerhouse of Windows-based software, Office software. Think about it. Back in those days, people would pay hundreds of dollars just for those two pieces of software to be housed on their computers. Now the company has reinvented itself to focus more so on, they still have Office, they still have Windows, but if you notice, those have become more so services. They've gotten more so into subscription services where it's recurring revenue. They also got into the cloud space where they host business services through the cloud. That's something that they weren't doing back in the 90s or in the early 2000s. So that's something that they had to reinvent. And that's also after them going through the monopolistic antitrust cases, which they lost. And thus, during that period, Microsoft became a do not touch, which means that they went from being in their prime to literally going into a decline and then just sitting there in a lull period. And you see companies do that. The good companies, though, you start to see that they get very, very active when it comes to investment. So what does that look like in today's modern landscape? I'll give you a playing field of what we're talking about today. There are three companies. Since we're entering into this revolution, let's talk about it because it's the future and we want to future-proof it, right? So when we think about future-proofing, let's look at, say, for example, three companies, NVIDIA, AMD, and Intel. Now, notice what happened. AMD was on the decline on the verge of bankruptcy. NVIDIA was still just doing its thing. Intel was the ultimate top dog, but then it started to decline. The competition started to get stagnant. And then essentially, you started to see that AMD had a reinvigoration by bringing in Lisa Su. somebody who was very much so pro-enthusiast, somebody who had been in the chip space, somebody that understood exactly what the consumers wanted and literally turned around a company to make it more competitive overnight. Whereas you had NVIDIA saying, okay, hey, we're still doing our thing. We're gonna keep doing it. We're gonna keep gaming on. We're gonna keep pushing the envelope as it pertains to artificial intelligence, as well as other services that we can offer, AKA getting into the cloud space. And then you had Intel that was sitting back and saying, well, you know, we're gonna just consistently just do our thing and we're gonna just keep returning value to shareholders. The problem out of those three companies was that out of the three, NVIDIA was led by somebody who was computer science led, so pretty much walked the talk. AMD finally got somebody that also walked the talk. Unfortunately, Intel did not have somebody like that. They had somebody that was more so focused on just business operational stuff, that didn't understand the innovation. Now, the tides have turned now. Intel has now stepped into the space where they brought in CEO Pat, who is a former individual that comes from the software and hardware side. So now he can reinvigorate the business. So now we could possibly see that a company that was on the verge of going out on a decline can possibly go through this process of reinvention and then maybe step back into the prime. And that's the cool part about it. When we look at companies stepping into their prime, notice some things that I'm gonna leave you with some tidbits. Here's some tidbits that you can see, or here's some points that you can carry on to start looking for it in your homework and looking to future-proof as it pertains to how is that future-proof, one, my portfolio, and then two, look at it down the road. Here's where it comes into play. Well, one, economics will always produce an opportunity within the marketplace. The reason why I say that is when certain things start to get tight within the market, you really start to see who's really willing to spend. And what I mean by spend, start to put money towards innovation. Where you see companies that are putting money towards innovation, or where you see companies that are looking towards new frontiers, new opportunities, and willing to take the chance, those are companies that are looking to either reinvent or they're now stepping into their prime. Another way that you can look at it is look at companies that have been toiling through the process and going through, but then look at how their process gets better and better and better. And the company's balance sheet gets better and better and better. So we can look at it from a financial standpoint, we can look at it from a social standpoint as it pertains to its market acceptance, as well as market acceptance, market dominance, or market decline. Another way that we can also look at the possibility for whether or not a company is stepping into its prime is look at its competition landscape. Is the competition also starting to decline? Meanwhile, they're still on the incline. If we start to see just those small little tidbits, then they really help you when it comes to putting forth shape and form and fashion of understanding who's in their prime right now versus who's not. And then the other part is look at who's buying, who's investing. So for example, we know that there's certain generations that are more so moving towards specific arenas where it's like, I want less risk. There are other generations that are gladly accepting the risk because they have time. So look at those things because they also paint a picture to it as well. When you put all those things together, it really starts to show you exactly how is it that you can start to anticipate the future over the next 2 to 5 years of who's going to be probably the most dominant players within the space. Who's going to stick around, who's always going to be there, and then who's going to be on their way out the door. Hopefully that helps. If you like what you heard in this video, go ahead and hit the like button. And if you want to be in the know for when the next one comes, go ahead and hit the bell so that way you can be a part of the notification squad, aka the Cool Kids Club. And if you haven't subscribed yet, then go ahead and hit that subscribe button down below. Until next time, I'm Mark Monroe, and this has been Future Proof. I'll see you in the next one. Peace.